Do you sell America on Fed independence risks?
I think so, because ideally, what you want to own is international assets. We do believe that in this environment, it is quite difficult and challenging for the US dollar. As a consequence, it could weigh negatively on US equities, particularly if you're an international investor. So that is one thing to bear in mind. But also, if we have a broadening out, that's an environment where you see better growth. We do think earnings growth will be better, so that makes other markets interesting.
Remi, good morning. Do you see then, as a result of this conversation around Fed independence, which has certainly gained momentum over the last 24 hours or over the weekend, a weaker dollar, we see that already a little bit, not a huge amount. We see some movement in bond markets. Does this add to reasons to look at non-US assets then? Is that what this leans into?
Yes, because there are interesting stories elsewhere too. So, for example, Japan, in Europe, we have other activities happening elsewhere. But when you have an environment where the dollar is weakening, this typically leads to positive dynamics elsewhere because it reduces financial tightening. And so that's what could make other asset classes, other equities, but other assets too, interesting. For example, commodities.
Yes, I was going to ask you about that because I think you had some positive things to say about gold. I mean, we see silver really flying today. Also, you're positive on oil, and I wonder, what's the argument around the commodities basket? Is it a risk-off geopolitics argument around commodities? What's the driving force for you?
There are three key driving forces. First of all, we do think that growth, global growth, broader growth will be better, which typically is positive for commodities. The other view is the US dollar. Typically, when the dollar weakens, commodities as well, particularly precious metals. But the third is geopolitics. Now, this is something we cannot call. As you mentioned, there'll be a lot of noise, but we do think that in an environment where geopolitics is going to be with us, and the best way to be proactive rather than just being reactive is to have some hedges in the portfolio. So it is a good environment for commodities. Admittedly, oil hasn't done well. It hasn't been the best environment. But at these levels, we think a lot of that negativity is priced.